Walmart earnings are out this morning. The company reporting adjusted earnings of 68 cents, which missed expectations. However, there were some legal expenses in that might not have been expected by all the analysts on the street. Walmart raising its full year outlook, even saying that costs from tariffs continue to rise, but it's still raising its outlook. And that stock right now down by about 2.8%. Joining us right now is Corey Tarlowe. He is Jefferies VP of Equity Research. And Corey, let's talk this through. You've seen the numbers. What was your takeaway?
So my main takeaway from this is really it's all about the top line. And Walmart
revenue was up.
The revenue was up. Beat expectations. Same-store sales were close to about 5% for the U.S. business. Consensus was about 4%. So that's a pretty sizable beat. The question, though, is that coming at the expense of margin?
Yeah.
And what the company is doing is they're investing in lower prices to drive market share. So that's
the same thing we've heard from just about all of these big retailers, Target, Home Depot, Lowe's, all of them kind of doing the same thing. They don't want to lose market share right now. And
correct.
So as a result, they're chasing that by eating the higher costs.
Correct. I think it's a question of magnitude, though, specifically with Walmart. What we've seen in our data is that their pricing basket versus Target, which you mentioned, because we did a back-to-school survey, is about 8% cheaper at Walmart than what you find at Target. So I think it's about Walmart.
How does that compare to a year ago? Because I think of Walmart as always having the lowest possible prices for consumers. That's what they advertise.
So their prices are on the back-to-school items. There's about several thousand back-to-school items where they just kept prices flat.
Okay.
On a like-for-like basis, though, across their entire box in the U.S., pricing's up about 3%. That's versus about 2.5% in the first quarter of this year.
What do you think about the sell-off in the stock this morning? I mean, look, this is a stock that has been an excellent performer. It's trading, I think, 36 times forward earnings. It's down by about 2.75% this morning on this. I don't know if that's because people perceive this miss on the bottom line as something more than just one-off legal expenses, or if they worry about something else they see here. What is your thought?
Well, I'd say, firstly, they didn't guide. So because they didn't guide and there really wasn't much of a barometer for where the numbers should shake out, they've now reinstated next quarter guidance. So we have the 3Q or Q+1 guidance. We have the full year guidance, which was raised on the top line and on the bottom line. So there's definitely better visibility, better trends in the business overall. Which I think speaks to the fact that this is a business that's moving in the right direction. It's gaining market share. Margins should go higher over time. There are really core long-term drivers that I think should accelerate profit over time. Margins are 4% today. They could go from 4% to 6% longer term. And that's really driven by advertising, fulfillment services, data ventures, and membership like Walmart Plus and Sam's Club, as an example. So these are kind of the drivers that are really just going to keep accelerating the business longer term. And that's why I would buy the stock on the weakness today. You
have a price target that's the high of the street, $120. That's a 20% increase from here. That's the next 12 months. You anticipate that happening? I think that's very reasonable. It's going to be driven by higher numbers and potentially a higher multiple, too. There's a scarcity value, I think, of retailers that are actually gaining significant amount of market share today. One is Walmart. The second would be Costco. And the third would be TJ Maxx. How much of this is Doug McMillon's leadership? I think it's a really big component of it. I actually had lunch with him about 2 months ago. And we had about an hour and a half together, me and several other people at about an 8-top table. And we spent about the first half hour about all the changes that he's making on the tech side of the business. That's I don't think people think about that as much. Everything from advertising, that was a stealth business that he built up. Yeah. I think that there's a lot there. So we actually dimensionalized what that tailwind could be over the next 5 years. And just to put this in perspective, this company did about $30 billion in operating profit last year. We think that with AI, automation, and advertising, that EBIT number of $30 billion could accelerate to $50 billion over the next 3 to 4 years. What does that mean in terms of employment there? So I'm really glad you asked that. That is a great question. So our perspective on this is that Walmart is a $680 billion retailer today. Over the next 5 years, they're going to be adding $130 billion in revenue. And wow, is that impressive? But what's even more impressive is that they're going to do that on a flat headcount.
Right, so that's the big issue.
But you can't lay off people when you've got so many customer-facing businesses, the people who have to be in the stores.
It's about augmenting the current employee base with technology to help to make the business more efficient. So, for example, I've walked through a number of Walmart's distribution centers, and they are works of art.
I've gone through a number of their stores recently and asked people questions, and sometimes they'll use a translator to try and first figure out what I'm asking them, and then try and figure out if they can find what I need from the back office. I mean, it does look like they're using technology in a lot of different ways.
It's really about two key ways. One is customer-facing, and then one is sort of employee-facing. On the customer-facing side, a lot of time that I've spent with the CEO is very focused on, for example, Walmart's app. So if you load Walmart's app today, right in the center of the app, there is a functionality called Sparky. It's essentially a generative AI chatbot that can help you to generate a basket and then ultimately use predictive...
It's like Clippy?
Precisely.
From Microsoft?
It's sort of like that, but it's in the earlier days. And over the next, I think, 12 months, the shopping experience on Walmart's app could look very different than what it looks like today.